There's a section of the tax code that lets you legally pay zero capital gains tax. Not reduced. Zero. It's been there since 2017. It's not hidden. It's not illegal. It's not even complicated. And yet 95% of Americans have never heard of it. Welcome to the Money Crypt. Let's open the vault. The Qualified Opportunity Zone. Section 1400Z of the Internal Revenue Code. Created by the Tax Cuts and Jobs Act of 2017. The government wanted money flowing into economically distressed areas, so they created the most aggressive tax incentive in modern history. Here's how it works. You sell an asset, a stock, a business, real estate, crypto, anything, and you have a capital gain. Normally, you'd owe tax on that gain. 15 to 20% federal plus state taxes. On $1 million gain, that's $200,000 gone. But if you take that gain and invest it into a Qualified Opportunity Zone fund within 180 days, the rules change entirely. First, you defer the original tax. You don't pay the capital gains tax until 2026 or whenever you sell the Opportunity Zone investment, whichever comes first. Second, and this is the part that matters, if you hold the Opportunity Zone investment for 10 years or more, all appreciation on that new investment is tax-free. Forever. Zero capital gains. Zero. Let me say that again. You invest your capital gains into an Opportunity Zone. You hold for 10 years. Every dollar of profit on that investment, whether it doubles, triples, or goes up 10 times, is completely tax-free. Why nobody talks about this? 3 reasons. 1. Your accountant doesn't know. Most CPAs are trained on W. 2. Tax optimization. Deductions, credits, retirement accounts. Opportunity zones are investment tax strategy, a different world. Your average H&R Block preparer has never seen a QOZ election form. 2. The minimum investment is perceived as high. Most Opportunity Zone funds require $50,000 to $100,000 minimum. That filters out the average investor. But here's what they don't tell you. You can create your own QOZ fund with as little as 1 investment property in a designated zone. 3. Wall Street doesn't advertise free. There's no commission on a tax loophole. Nobody's running ads for Section 1400Z because there's no product to sell. The information has no commercial sponsor, so it doesn't show up in your feed. The zones are everywhere. There are over 8,700 designated opportunity zones across the United States. They're in all 50 states, plus territories. And they're not all rural wastelands. Parts of downtown Miami are opportunity zones. Sections of Brooklyn. Areas of Austin, Nashville, Charlotte, Raleigh, Atlanta. These are high-growth areas that were designated distressed based on census data, but the reality is that many of them are rapidly developing. You can check any address at opportunityzones.hud.gov. Type in a zip code and see if it qualifies. I'd bet money there's an opportunity zone within 30 minutes of where you're sitting right now. The real play. The sophisticated investors aren't just deferring taxes. They're stacking strategies. Play 1. Sell appreciated stock with a large gain. Roll the gain into a QOZ fund that invests in real estate development in a high-growth zone. The real estate appreciates. The rental income flows. And after 10 years, the entire appreciation is tax-free. Play 2. Combine a QOZ investment with a 1031 exchange on the real estate side and a cost segregation study for accelerated depreciation. You're now deferring gains, eliminating gains, and creating paper losses, all within the same investment. Play 3. Use a self-directed IRA or solo 401k to invest in a QOZ fund. Now you've got tax-deferred money going into a tax-free wrapper. The compounding on that structure is almost obscene. These aren't theoretical strategies. These are being executed right now by every family office and high-net-worth advisor in the country. The only difference between them and you is that someone told them about it. Now someone's telling you. The deadline you need to know. The original capital gains deferral benefit, where you could also get a step-up in basis, expired for new investments after December 31st, 2026. But the 10-year capital gains exclusion is still active for investments made in qualified funds. That means the window is narrowing. If you have capital gains you're sitting on, whether from stock sales, crypto, business exits, or real estate. The time to explore this is now, not next year, not when your accountant brings it up. Now, the takeaway. Section 1400Z. Qualified Opportunity Zones. Defer capital gains. Hold for 10 years. Pay zero tax on appreciation. 8,700 zones across America. Tools to check any address for free. Strategies that stack with 1031 exchanges, cost segregation, and retirement accounts. This isn't a loophole that's going to get closed. It was designed this way on purpose, to move capital into underserved communities. The government wants you to use it. The question is whether you will. Subscribe to the Money Crypt. We open vaults that were never meant for you.